Welcome to our exploration of monetarism, an economic theory that emphasizes the crucial role of governments in controlling the money supply. Originating from the ideas of renowned economist Milton Friedman, monetarism revolutionized our understanding and management of the economy. Monetarism asserts that the money supply is a primary determinant of economic outcomes. By controlling it, governments can stabilize prices and foster sustainable economic growth, offering a framework to address issues like inflation and economic instability. Throughout this video, we'll delve deeper into the principles of monetarism, tracing its historical roots and examining real-world applications. We'll explore Friedman's groundbreaking contributions and their lasting influence on modern economic policies. From theoretical underpinnings to practical insights, our goal is to provide a comprehensive understanding of monetarism. So, whether you're an economics student, a financial professional, or simply curious about economic theories, stay tuned. You'll see how pivotal controlling the money supply can be in shaping our economic landscape. Milton Friedman, the pioneer. Born in 1912, Milton Friedman was an American economist who reshaped economic thought. Renowned for his advocacy of monetarism, he believed that the money supply is the key determinant of economic health. Friedman earned a Nobel Prize in Economic Sciences in 1976 for his research on consumption analysis and monetary theory. His influential book, A Monetary History of the United States, showcased how monetary policy could control inflation and influence economic outcomes. He contested the prevailing Keynesian view, arguing that excessive government intervention often led to instability. His theories suggested that controlling the money supply was a more effective way to manage the economy, setting the stage for today's monetary policies. From advocating for a floating exchange rate and a volunteer military to proposing school vouchers, Friedman's ideas extended beyond monetary policy. As we move forward, you'll see how his revolutionary ideas on money supply profoundly changed economic policy, shaping our modern economy. In this segment, we'll delve into one of the core elements of monetarism, the role of money supply. Milton Friedman argued that changes in money supply have profound effects on economic activity, influencing inflation rates, employment levels, and overall growth. Through extensive research, he demonstrated that controlling the money supply could lead to more stable economic outcomes. Friedman's key argument is that inflation is always a monetary phenomenon. By managing the money supply, central banks can steer the economy towards stability and growth. As we explore his theories, it becomes clear how his insights revolutionized our understanding of monetary policy and its impact on daily life. We'll see how these ideas were shaped by their historical context and continue to influence modern economic policies. Stay tuned as we unpack more of these revolutionary concepts. Before Milton Friedman's theories on monetarism, economies struggled with persistent challenges like rampant inflation and economic instability. Governments frequently resorted to ineffective measures, leading to higher unemployment and stagnation. This period of uncertainty highlighted the need for new economic solutions. Into this landscape stepped Friedman, offering a fresh perspective through his monetarist approach. Friedman identified key problems: rampant inflation and inconsistent economic policies that disrupted markets and livelihoods. His solutions, centered on controlling the money supply, tackled these pressing issues directly. Understanding this backdrop is crucial as we explore how Friedman's ideas reshaped economic frameworks and continue to influence policies today. Next, we'll dive deeper into his core principles and their enduring significance. Few names resonate as powerfully in economics as Milton Friedman. His theories on monetarism revolutionized our understanding of economic policies and inflation control. At their core, Friedman's theories emphasize the vital role of controlling the money supply to manage inflation. Through publications like A Monetary History of the United States, Friedman argued that money supply fluctuations cause economic instability. His principles challenged the prevailing Keynesian thought, advocating for a steady, predictable increase in the money supply rather than reactive fiscal policies. His theories also underscored the long-term neutrality of money, suggesting that money supply changes affect price levels and inflation long-term, leaving real economic variables like output and employment unaffected. These insights laid the groundwork for modern monetary policy and continue to spark discussions among economists and policymakers. You'll see how Friedman's ideas have shaped contemporary economic practices and the ongoing debate over the best methods to achieve economic stability and growth. Monetary policy is a powerful tool in economic governance, crucial for controlling inflation. Milton Friedman emphasized how managing the money supply allows central banks to steer economies towards stability and growth. The Federal Reserve exemplifies this in action, adjusting interest rates and engaging in open market operations to manage inflationary pressures. Friedman's theory posits that a regulated money supply can prevent runaway inflation and the resulting turmoil. Consider Japan's experience in the 1990s. Faced with deflation, the Bank of Japan expanded the money supply, leading to economic recovery. This highlights how effective monetary policy can address both inflation and deflation. As we proceed, you'll see how experts weigh in on the lasting impact of Friedman's theories and their applications in contemporary economies. These insights will offer a deeper understanding of the interplay between monetary policy and inflation control, underscoring the enduring relevance of Friedman's work. In this segment, we turn to experts to delve deeper into the impact of Milton Friedman's theories. Renowned economists share their insights on how Friedman's focus on the money supply has reshaped monetary policies and influenced the broader economic landscape. From stabilizing inflation rates to preventing financial turmoil, the real-world applications of his ideas are profound. Specialists describe how central banks worldwide have adopted Friedman's principles, fine-tuning the money supply for economic stability. Experts also highlight the transformative effect his theories have had on fiscal policies, sparking debates on the government's role in the economy. These implications create a ripple effect across various sectors and regions. As we journey onward, consider how Friedman's insights continue to resonate, shaping the strategies of policymakers and leaders. Next, we'll explore the modern applications of monetarism, demonstrating the ongoing relevance of these foundational theories in today's economic strategies. Exploring the modern applications of monetarism reveals how Milton Friedman's ideas still shape economic policies today. Central banks and financial institutions worldwide employ monetarist principles to navigate complex economic landscapes. For example, the Federal Reserve's strategic manipulation of the money supply has stabilized the U.S. economy during financial turbulence. Similarly, the European Central Bank has adopted monetarist-inspired policies to manage inflation and foster growth across the Eurozone. These modern applications underscore the enduring relevance of Friedman's theories, showcasing their practical impact on ensuring economic stability and managing inflation. Monetarism's influence extends beyond monetary adjustments, shaping broader fiscal strategies and decisions. These examples make evident that monetarism's core tenets remain vital frameworks for addressing contemporary economic challenges. Stay tuned as we transition to the critiques and counter-arguments that have emerged in response to these influential theories. While Milton Friedman's monetarist theories have profoundly influenced economic thought, they are not without critics. Some argue that his focus on controlling the money supply oversimplifies economic complexities. Critics note that his theories may not fully account for factors like fiscal policy, labor markets, and global influences. Alternative economic theories challenge the core tenets of monetarism. Keynesian economists, for instance, emphasize government spending in managing economic cycles, contrasting sharply with Friedman's views. Understanding these critiques is essential to grasping both the strengths and limitations of monetarism. Through this exploration, we gain a more comprehensive understanding of economic dynamics. Next, we'll explore how these alternative viewpoints influence modern economic policies and their implications for future monetary strategies. As we reach the end of our journey through monetarism, we reflect on Milton Friedman's profound legacy. His ideas altered the course of how economies manage inflation and achieve financial stability. From his early work to influential publications, Friedman argued that economic stability hinges on the regulation of money supply. His theories fostered a new understanding of monetary policy, shifting focus from short-term interventions to long-term planning. Today, Friedman's legacy continues to shape policies and spark debates among economists. His principles are more than historical artifacts, they underpin much modern economic governance. As we move forward, Friedman's teachings will remain a touchstone for navigating economic complexities. His impact transcends generations, ensuring his contributions will guide and influence future economic landscapes. This is the lasting legacy of Milton Friedman, a pioneer who reshaped our understanding of economies.